Welcome to another episode of Founders Club. Today, I'm very excited to be sitting with Roan Yarn, the founder of Bit Real Estate Exchange and the cryptocurrency Cointinuum. We're going to be talking about all things real estate, blockchain, and cryptocurrency, how blockchains and cryptocurrency will affect the real estate industry as a whole, and all about the future of property tokenization. If you have any questions, put them in the box down below. If you're new, make sure you subscribe for future episodes, and we'll see you on the inside. Welcome to Founders Club, the show for real estate entrepreneurs. Welcome to a live episode of Founders Club. Welcome, Roan. Thank you for coming on.
Oliver, thank you for having me. It's great to be here.
Let's take a step back and kind of just walk me through, an overview of your background, and then I want to kind of go on, into like how you got into the space.
Now, I am a real estate professional by trade. I was not a technology wizard in college, but what I found throughout the course of my career is that my practice of real estate and technology was constantly intersecting with technology, and so I incorporated it. But let me just give you a little bit of sense of my background. I've been in real estate for going on 20 years now. I started cutting my teeth on the beaches of Miami Beach, down there, South Beach, investing in property. I was plucked out of a bank by an investor who saw something in me, and he became my mentor, and we bought property all over the country together. I eventually parted ways and went on to grow my own business. And over the course of my career, I bought and sold hundreds of properties. I've also worked in local city government as well as for nonprofit groups that focus on real estate. And so I've seen the real estate industry both from the private sector, but also from the public sector and from the nonprofit perspective, which has given me a worldview around real estate that not many people have. What it has afforded me is a lens with which to see the current market in ways that maybe other people haven't. There's certainly people that have developed platforms similar to the one that I'm developing, but I like to think that I came up with the idea first. You look at a company like Zillow, for example, they started in 2006, former Microsoft executives that didn't have a lick of real estate experience. I guess if you're working with a few $100 million in your checking account, you could probably get a project off the ground fairly quick. But I'm a real estate guy, so we've been bootstrapping it and, taking the innovation from the lessons that we've learned over the course of many years and bringing them to bear to solve problems in real estate.
No, that's cool. I think you also, to your point, have a really unique perspective based on your background, just given the fact that you kind of have that full 360 view on the industry, which I think is really cool. So that's kind of the real estate side, right? And then now let's talk about the crypto side, because I think everyone kind of has that aha moment in when they start first learning about crypto. So tell me about that journey. How did you get into the crypto blockchain space?
I'd love to. I think it's interesting, being an entrepreneur, you attract other entrepreneurs and you hear a lot of ideas. Some of them sound great and others not so much, right? But what you begin to see is sort of like a pattern. And what I found being in real estate is that it seemed to be on a similar type of treadmill that you would be on if you were working for another, company. Just as an example, I worked in low-income housing as an investor buying properties, and I found that it was this continual, process of, cat and mouse, chasing the tenants down to pay you. They're wrecking your properties. You're fixing them. You're going after Section 8 money. They don't want to pay you because your tenants messed up your property. And that stuff is so frustrating, and I thought there's got to be a better way. So I got my real estate license and started selling property. I thought, well, if I can make money off of the deal, then, this whole idea of being an investor is great. But, there's got to be a point at which it starts to feel good. You don't feel like you're always on a treadmill. No, 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 no. Being a real estate agent is even more of a treadmill. And it's funny because, you have to duplicate so many of the efforts that other people have made. You spend a lot of your time, frankly, marketing, and it's only, 5% of your overall work output that results in a paycheck. And I thought, well, what if there's a way to automate these processes so that you could buy, sell, properties, market them through an algorithm or through, some sort of automated type of technology. And that's when I set out on this, quest, if you will, to create a platform that does just that. And my initial attempts, were like working with wholesale investors. I started that one back in 2003. I did some other things while I was still in the lab, and I created another platform in 2014 in which it was designed to do similar things to address the issue of output so that people could, if they want a property, they can list it and sell it quickly. And there were a lot of valuable lessons learned there, but ultimately was unsuccessful, unfortunately. I still kept doing real estate as an investor all along the way, mind you. But I finally had the aha moment as I was watching Bitcoin and understanding it. I read a lot of books about Bitcoin, one by Antonopoulos, which was sort of the Bible for me in understanding Bitcoin and how it works under the hood. And I thought, what if you could use this technology not just for everyday transactions? There's a lot of low-hanging fruit there, but I thought that that's where the competition was going to run first. I thought, well, instead, what if you could use it for buying, selling, and trading fractional shares of properties? And so that's what I've been working on for the last few years, is developing this cryptocurrency trading platform that functions more like a ETF than the traditional brokerage style real estate market. And so right now it's kind of interesting when you look at the trajectory of tokenization. It's kind of a joke. This sort of goes back to how you find dev operators. You got technical people who understand how to build things, but they don't understand the industry that they're playing in. And so a lot of dev operators were sort of creating functionality around tokenizing novelty properties, like a $50 million estate, somewhere in Malibu or something like that. And that's all fine and well, except who's got interest in really buying something like that? You need something that is of value to people, that, serves a purpose beyond just making money. And so what I set out was how to create a cross-section between social impact and the technology, and then working with things that are important to me, like, green technology. And so I, created partnerships with companies over the, course of the last few years that, we're focused really more on the data center market, which I think is going to be really crucial. And there's going to be, ecosystems that sort of branch out from that. But the reason why we chose data centers as the means of creating investment products is because if you understand Bitcoin, you understand that it has a mammoth, carbon footprint. What it takes to run a full node of Bitcoin would make executives at Exxon blush, because they spend so much money on power to run the nodes. It's just insane. And so eventually people have got to figure out how you're going to run these data centers, these old clunkers, in a way that is sustainable and with renewable. And so, me and my team were focused on creating properties and projects that will create energy and process information, storage of data, as well as, transactions on a network that is supplied entirely by green energy.
What year did you first get into Bitcoin? Because I'm guessing it started with Bitcoin, right? I feel like that's kind of where everybody starts. So when did you get into that?
Right. Well, here's the thing. I made the mistake of learning about Bitcoin before I bought into it, if that makes sense. So, a lot of people will be told, hey, go buy this Bitcoin. Here's how you do it. And then they'll just go buy it. And I probably should have just done that. I was, back in 2015, I was, going to meetups and learning a lot about it through groups like that. And what I found was I just, I met a lot of, programmers. And so I wanted to understand the programming aspect because, I sort of understood what I was going to do with it, but I wanted to understand how it works under the hood so I could make maybe a, better mousetrap, if you will. What I read really created in me sort of a anti-Bitcoin sort of ethos in me, which was, I was seeing all the things that was wrong with Bitcoin. It's a prototype, and here's how you can fix it, and here's how you can make a better Bitcoin. And I love Ethereum because they've taken it to the next level. It's like Bitcoin 2.0. And back when I first learned about Bitcoin, they were like $20, $25 a piece. I think you couldn't give them away in some cases. But, I didn't buy Bitcoin until a few years ago and in very small amounts. So I'm not a Bitcoin millionaire. But I will tell you that, my path of learning about Bitcoin came from researching it, reading the white paper, understanding how it could be done better and not how to make money off of it. So everyone's got their sort of reason to be, and mine was not to become a Bitcoin trader. My goal was always to create a better type of currency that could be used to buy, sell, and trade real estate.
Yeah, it's definitely the way that things seem to be going. There's mass digitization of everything, and I think over the next couple of years, it's going to be a real interesting ride as far as how things change with blockchains and NFTs and all these new ideas that are kind of springing up, and and really finding out like their real world applications and how we can use these like emerging technologies to better and improve processes and make things more efficient across the board. So I'm curious, like macro level, big picture, how do you see just blockchains in general changing the face of the real estate industry?
That is a huge question, Oliver. I'll tell you, you'd have to be a gambling man to really say one way or the other because, there's a lot of cross currents that, the average person doesn't really know or care about. And I can tick them off one by one. Right now, we're really in the nascent period of Web 3.0 and blockchain 3, if you will, because if you look at it like, okay, so Bitcoin, what made it interesting was its proof of work algorithm, which is sort of the reason behind the fact that it takes up so much space and so much bandwidth, because it requires the duplication of efforts. I think I may have made the analogy before that it's sort of like, ordering a pizza from 85,000, pizza restaurants in the, entire state, having them all sent to you and then choosing one of them saying, thanks for the pizza, guys, and sending everyone else home. You just don't do that in the real world, but that's exactly how, Bitcoin works. Everyone runs the computer mining at it, and it's always the first person to get the knots, the number that is like, the winning prize, if you will. It's the answer to the algorithm, and you in reward you get the block, which is a full Bitcoin or whatever, and that's going to get halved over time. The halving comes in a couple of years, from what I understand. But what will ultimately happen with that is we'll decide, there's an arcane group of people who make the decisions around updating the protocol. BIP is the short word for Bitcoin Improvement Proposal. And so there's a whole process that I'm not going to go into here for that, but it basically explains how changes get made to the Bitcoin. Now, one of the challenges for Bitcoin is that as you get closer to that $20 million, 21 million Bitcoin, you have some choices to make around the functionality of Bitcoin and how it's going to respond to, its level of difficulty and, solving these algorithms. And so some choices will have to be made there. And if they make the wrong choice, of course, it could result in a lot of people losing their shirt. And if that happens, it's going to give maybe Bitcoin a bad name for a while. But there's also some, exciting things happening on the Ethereum side. And, you've got people who've already sort of seen down the road and understanding how we can fix, questions around like the fees, which are extremely high. I don't know if you understand or how versed your listener, your viewership is on the issue of Bitcoin fees or blockchain fees in general. But in order to get into a block, there's some competition there if you want to get it done in a reasonable period of time. And over time, that price can vary, and people suspect it's going to continue to get higher and higher, which is going to create problems in the network and make things slower overall. So I can tell you, to answer your question, the previous two versions of blockchain will never be a substitute for Visa or any of the other digital transaction methodologies that are currently being utilized today in a commercial way. So it just can't work. Like, for example, Visa processes on the order of 65,000 transactions a second, and that's their capacity. They can do around 65. I believe that's the total per second, and Bitcoin does like 7 transactions a second. So it takes 10 minutes to do a transaction, and therefore, of course, it could never really be a competitor. So it's never going to replace the mode of transactional economy that we have today. So that's not even an issue. But the question really is, what will happen in terms of high finance? Like, how will it be brought to bear in terms of solving problems in supply chain networks? I think it's got a valid use case to be sought there. How can it be used to prevent fraud and counterfeits? Those are all areas where it does very well, but a replacement for money is not. And so we have to stop looking at it like that.
Yeah, and I would agree with what you just said there. I'm also more wondering, like, what things do you think can be put on the blockchain in terms of the real estate industry? Because I know there's a lot of talk about, in the DeFi space about, tokenizing insurance. I'm sure that real estate titles could be put on a blockchain and more easily transferred. So is that the type of stuff you see coming down the road, or what are you seeing?
Here's the deal. It all comes back to scalability. And so the problem that we have is similar to our voting system. The process of recording a deed differs by county, by state. There's so many different ways to do it. You have an interoperability issue in order to scale that in terms of putting title itself on a blockchain and making title the new way. Blockchain, the new form of doing title. That was my original thesis. And then I quickly came to realize that was like fool's gold, because there was no way you were going to get people to agree on how that should be pursued. Now, when you talk about, again, high finance, like such as with derivatives and insurance products, investments, all those things are fair game and very easy to do. Now, what you could do, is similar to a PUD with a planned urban development. You go in as a developer and you buy up a piece of property, and when you start that development, you put it all on a blockchain and you say, this is how the rules work. You can absolutely do that. somewhere there's going to be a deed restriction, which speaks to that. Similar to a condo doc, with the HOA, you've got a covenant agreement. And so a covenant agreement would establish the rules by which you would express that blockchain rule on how those items are dealt with. And that would be the more sensible way to do it. It would be a patchwork, of course, but it would be very difficult to get existing properties across, municipalities, states, counties to all agree. So I'm not sure how pragmatic that is. But from an investment standpoint, you absolutely could. And in fact, I don't want to give too much away, but that's the sort of thing that we're working on right now in terms of going after larger, investors with substantial holdings, where you might be able to tokenize an entire portfolio and roll that up. And that's a totally different prospect.
So yeah, that's definitely cool. So is that kind of one of the Cointinuum projects that you guys are working on? Or
absolutely.
Yeah,
absolutely.
Like what's your vision? What's your vision for Cointinuum? I guess is the best way to ask it. Sure.
Well, I should explain that Cointinuum is really just like one side of a brain, if you will. It's more of the if I had to choose which side, I guess it'd be the left side, because it is sort of a technical-minded thing. But on the other side is the Bit Real Estate Exchange. Okay, and so the BRICS exchange is sort of more decentralized. What I mean by that is that the vision is to tokenize assets and have them be tradable on the exchange, either in whole or in fractional shares, in the same way you would an ETF to be able to buy, sell, and trade fractional shares of companies. You could buy, sell, and trade fractional shares of debt, fractional shares of equity, fractional shares of the insurance contract on a property, fractional shares of the contracts or the leases on those properties. So there's a lot of ways that could be, a lot of things that could be done within that. I like to think of the Bit Real Estate Exchange as sort of an elegant solution to the question of liquidity and stability. And so I think that really dovetails kind of perfectly into like why did I even create this in the first place? What I saw really as a challenge in the cryptocurrency space, vis-a-vis Bitcoin, is just the sheer volatility of it. Absurd swings of 40% of its value in an entire afternoon is untenable and unthinkable in a normal sort of market. Yeah, you get daily fluctuations in the bond market, in the stock market, but not as you would have seen in the early days of Bitcoin. And so I thought, well, what if you had a stable coin that was not tied to the dollar or pegged to the dollar, and not pegged to gold, which still fluctuates, but instead was pegged to a batch of real estate assets or an entire group of real estate markets. So it would have a natural ebb and flow to it, but it would be on a very mild basis. It would be virtually stable, because although you could hold it and for a period of a quarter or 6 months to a year, you could benefit from the uptick in that real estate market, you wouldn't see those hourly, minute by minute fluctuations that you find in the cryptocurrency space. And so, that was the answer to that question. But then also, from the real estate operator's point of view, the biggest downfall in owning real estate is the sheer lack of liquidity. You own a property, you can't sell it that afternoon, and you will have to go through a process to get equity out of it via a mortgage. And so I thought, well, what if you could access capital more quickly via this exchange service in Bit Real Estate Exchange? And so the Bit Real Estate Exchange solves the issue of liquidity for a real estate owner and stability for a cryptocurrency owner.
I'm glad you brought that up, because that was actually my next question was, can you talk to me a little bit about the Bit Real Estate Exchange, what it is, how it works, which is, I think, where you're going right now.
That's exactly right. So, the Cointinuum is the native currency utilized on the Bit Real Estate Exchange. So you have to have a common currency that can be used to buy, sell, and trade separate pieces of property, right? Because every property is different. But if you can sort of distill every property down to $1 and distill it even further down to a Cointinuum or a quant, in the case of like the smallest divisible bit of a Cointinuum, then you have sort of a framework that you can use to cross-trade properties. So, you've talked about, or you've not talked about it, but you've seen in certain scenarios where people will take, one real estate asset and trade it for another. For various reasons, people might want to do a trade. Well, in this case, there's more of a objective methodology to that, because you can view it based on any number of metrics, whether it be for a cap rate or whether it be for the pace at which it has appreciated given its area, its marketplace, that kind of thing. So there's all kinds of ways of looking at it. But the Bit Real Estate Exchange utilizes Cointinuum as the conduit for making those exchanges. Similar to on the Ethereum platform, where you have ETH traded for various purposes to transact on the Ethereum blockchain.
How does the process work on the Bit Real Estate Exchange once you have Cointinuum and you're like ready to go?
Sure. Well, like I said, we're still in the process of the development of the exchange itself. What people can do today is they can absolutely buy Cointinuum. They can absolutely invest in our projects. We have several of them. They're data center projects at this stage of the game. But what will happen is post ICO. So we have an ICO in the process, and when that is completed, then individuals will be able to buy them publicly. But right now, you buy them privately from Bit Real Estate Exchange, and they'll be tradable on the exchange in the near future. So let's call it later in the year, maybe by the end of the fall, you'll be able to buy and also trade in the same instance across the platform.
That's exciting. So we'll definitely have to keep an eye out for that. So that's very cool. For those that are interested in the project and maybe getting in on the coin and all that, where can they find out more info?
Absolutely. I would ask your listeners to go to cointinuum.io. That's cointinuum.io. And you can just use the contact us page, and we will reach back to you to see about getting you some Cointinuum, and to introduce you to the various projects that we have underway. Like I said, our emphasis is on social impact projects, green technology and that sort of thing. So if those are things that you're interested in, as well as investing in real estate, and of course, obviously you're listening to this for a reason. You're interested in real estate, but sort of like investing in real estate with a double bottom line, or a higher purpose, I like to say. So, yeah.
Yeah. So cool project. I'll definitely check that out, and I would encourage everyone else to check it out too. I think there's just a lot of moving pieces that are going to be coming around here pretty soon. I think as more things digitize and more blockchains become more sophisticated, to your point, moving into like the Web3 era, I think there's just going to be a lot of exciting projects coming around. So
That's
definitely
exactly
this
right.
is one. Yeah, this is definitely one to keep an eye on. One thing that I heard you say that I thought was really interesting was it that you can package up a property and put it and then fractionalize the ownership. How does that work? Talk to me about that.
Sure,
Because that's
right.
really
So
interesting.
right. So what you just sort of like, highlighted is the concept of tokenization. All right. So tokenization, um, to give you sort of the best analogy, like if you've been on a gaming website in the recent past or Reddit, there's little tokens that you can get, right? And so there's different types of tokens. There's a utility token. A utility token is a type of token that can really only be used on the platform. And so we have what's called a Cointinuum BRX, or BRICS for short. And of course, it's no accident that BRICS, BRX rhymes with bricks, because of course that's what you use to build.
I like that. Well played.
Right. So a Cointinuum BRX token is the native utility token, which is the one that's like swappable on the exchange itself. Now, the Cointinuum CTM is the one that you can use to trade for other cryptocurrencies. So, soon you'll be able, once we've completed the ICO, you'll be able to find it on other platforms. You might find it on Coinbase, even maybe Binance, that kind of thing. The idea would be that when you tokenize a property, meaning that you create divisible units of that property, much like you would do a sort of a condominium project. Let's say you buy an apartment building, and you go condominium with it, right? So you're going to take each one of those individual apartment units and subdivide them into condos. And you're going to sell off each of those condos. But when you buy a condominium, I'm sure most of your real estate professionals understand how that process works. You agree to the rules of the HOA, and there's covenants that you have to, abide by, and you agree to, and similarly, you have a covenant with respect to the token property. So you buy the property through the token with the understanding that you can only do so much of it, right? So like I could never like come in with a sledgehammer and a chainsaw and cut out my piece of a condominium, and get a crane and rip it off the top level and take it somewhere. You know what I mean? That's not allowed. Similarly, you can't do that with token, but what you can do is sell it all day long. You have the right to sell it anytime you feel like it. No one can stop you from doing that. And so that is essentially how it works.
Yeah, so this is a really interesting concept to me, and I heard you say this a couple times already, and I want to go a little deeper on it. Like,
sure.
Tell me what you mean by property tokenization.
So when you tokenize,
how does it work?
Sure. Well, you would well, it's not something you can do on your own, or you could, but it would be like you creating your own token. It could be valuable to somebody. It could be completely worthless. What makes the token valuable is several points. It's got to be tied to an asset that's of value. People have to want it. It's got to be fungible, meaning people have got to be able to trade it. And then, you have to have rules in place so that people understand how they can get it and how they can get rid of it. So, or what happens under various scenarios. And so the process of tokenizing a property with us is quite simple. You would fill out our form, basically an intake form. You say, I'm going to tokenize my property. You would say all the reasons why you think it's valuable. We would do an independent valuation of that property. We wouldn't just have one person value it. So we wouldn't just take one appraiser. We'd take, a series of appraisers that are selected by a governing body, and they're the ones that are allowed to go in and value a property. Lastly, you'll come in and do the technical tokenization of that property, which basically just looks like legal work, and then once you have the legal framework, then you come in and do the technical framework, which is basically creating a actual token, and you've got many to choose from across the web. But I would suggest Bit Real Estate Exchange because our job is not just to make money off of you. Our job is to create an ecosystem that will be able to last for the long haul. And I make that differentiation without, a real, I do it without thinking that, I'm just doing it. I'm doing it knowing that there's plenty of examples in the course of blockchain where, people have, tokenized assets for zero reason. I think I mentioned in the very beginning that vanity project of tokenizing a $30 million property. It serves no useful purpose other than to say I did it. But what I look for is, what is the good it's doing in the community, both the blockchain community, the cryptocurrency community. What is it doing in the actual community where that property is? What benefit is it serving? And so I would say, if you're looking at, different tokenization platforms, definitely support a growing network, because a lot of those were also built on sort of the earlier technology, and the technology that we're developing, similar to a Cordera, is going to be with an emphasis on sustainability of the platform, lowering fees, and then a governance or a treasury that ensures that the technology itself is always growing and getting better. Because what you don't want to have happen is have your property stuck on a platform that's not going anywhere. It was built on Web 1.0 technology, and it has no means to correct itself. And so with the Bit Real Estate Exchange, we take a similar approach to the ADA or ADA, where the technology has to have a track that it's always using for governance and improvement. And so that would be the key differentiator from that standpoint. But I think that
yeah, no, it did.
It did.
And I'm curious, just to kind of keep going a little further down the road, like, who do you imagine being the users of this? Is this, in your mind, big picture, is this everyday people buying and selling real estate? Or is this more like for syndicators to like package up a deal and sell different parts?
Oliver, I'm so glad you asked that question, because to me, this is like one of the most important aspects of what we're doing. Okay. You're talking about access. If I wanted to be involved with an IPO, let's say, Apple back in the day, or Facebook back in the day, like, you would have had to know somebody in order to be involved with that. And so that calls into the question, the fairness. And some people are okay with it not being fair. I take a different idea. I believe that the democratization of investments is critical to allow everyday, ordinary folks to participate in the technology economy, similar to like a Robin Hood, if you will, right? So when you look at, our target market, it is accessible to syndicators. It is accessible to private equity funds and hedge funds and the like. So we can definitely do business with whales, but we believe that it is going to be the soccer moms and the kids still living maybe in their parents' basement that are going to be the ones that can really benefit the most from this, because they'll be able, similar to like the NFT revolution, where they're able to buy these smaller fractional shares, because like an ETF, there's no minimum. If you want to buy a $5 interest in this data center, you'd have the capacity to do that. By the way, that's not currently allowed. So the idea, though, is to make it accessible to everybody. So I don't know if your listeners know what alpha is, as an investment term, but essentially,
Yep.
It just represents what's hot in the market, what's getting throwing off the best returns And data centers are strong alpha, in the real estate space. And so that's not something that's really generally open to the average investor. There's minimums. There's a lot of,
right,
accreditation and so forth. But what if you're just a kid, or what if you're a soccer mom? You find it interesting. I want to make it accessible. You can have a pro platform for exchange purposes, but you also got to have a really dumbed down, excuse the language, but simplified version, over-the-counter exchange that allows people just click one or two buttons and buy a fractional share of a piece of property. This means that they don't have to know somebody. And by the way, not everyone lives in a great real estate market. I mean, if you live in one of the depressed areas, as an example, Dayton, Ohio is where my wife's from. And I use it as an example because, it was once a thriving community, had GM there building cars. When they shutter factories and they close these factories, you see a lot of brain drain going on. Kids graduate from those local colleges, they immediately leave. And so it creates a cycle of depression in those areas. Now, that's fine if you want to stay in that area, buy a cheap piece of property. But, if you are an aspiring real estate investor, it means you got to jump on an airplane or you got to go somewhere. Now you got to spend all your time figuring out, who's a good contractor down there in that city where I've got my property. The nightmare of trying to, deal with a property out of state. So now you've got a property manager that eats into your fees. We make it simple. You don't have to deal with a real estate agent. You don't have to deal with a property manager. You don't have to deal with the, the property taxes on it. There's a whole laundry list of reasons why you might not want to be a direct owner in real estate. And so from that standpoint, this is people with 401ks that rolled it over. These are people with IRAs that are self-directed. So there's a lot of people who would be interested in this type of product, including institutional investors.
I mean, honestly, it sounds really cool. I'm so excited to kind of just see where this stuff goes and what the future holds in terms of all these coins and cryptocurrencies and how those fit into the real estate market and how blockchains fit into the real estate market. And I just think, we're in for a fun ride. And, I think these open, decentralized protocols are the future. I think, to your point, they help simplify everything. They open access to more people. They are focused around security and transparency, which I think is really important as well. So overall, really like what you're doing. Excited to keep watching. Exciting to see how just the industry as a whole kind of evolves and progresses. Just have a couple of wrap-up questions that I like to ask people. I normally ask people what they're investing in, but since we're talking about crypto and those kinds of things, what coin projects are you most excited about?
Well, I'll tell you, the Cordera project is my probably the most interesting project to me because it really reflects a lot of my personal, ideology, if you will, or for lack of a better word, or my own understanding around where we are in the space. I believe that it's simply unsustainable the way that Bitcoin has grown to the mammoth, size that it has. The fact is, I have money in Bitcoin, and I'll keep it there at least for the short term, because why not? But I think that it also gives me a little bit of a stake and maybe a platform with which to make the case that that there's stuff that can be done. There's also questions around the long-term security of Bitcoin, and you'll have to have me back one day where we can talk under the hood of Bitcoin, and I can share a lot of the scary details around that, but also some hopeful things that can be done. I mean, I'm not a programmer, like I said, but I like to consider myself like a professional problem solver. If you've been in real estate long enough, you're a professional problem solver because you don't make money in real estate without solving problems. If there's no
That's right. That's the
problems to
name of the
solve,
game.
yeah, if you've got no problems to solve, there's no money to be made there. And so when I look at Bitcoin, I say, okay, yeah, well, we can fix that, and we can fix that. Well, what if we do this? And so maybe one day I'll get around to writing up my own Bitcoin improvement proposal. But more on that later. But I will tell you, yes, I'm in ETH, so I'm definitely in Ethereum. But I think that the Web 3.0, and I would watch anyone who's dealing with the sustainability issue, anyone who's dealing with governance issues, people who are creating economics and creating ecosystems that are actually designed to help people. I don't mean to throw people under the bus, okay? But there's a lot of blockchain stuff out there that's just ridiculous. And it seems self-referential, where people are saying, it's worth something because I say it is. And I've got 10 people who agree with me. But by the way, the money that I get, I'm giving a bit of it to them. And then it's just with this sort of self-referential treatment where, you have a blockchain that's not really doing much for the sake of humanity, but doing something for its own sake. And so I'm not going to really call out names, but I think if you start to, make the rounds and see people, you'll begin to see that, wow, this just looks like people creating something just to spit out money. And I would sort of encourage people to, not chase shiny objects, see things for what they are and learn how things work. And once you see how something works, then you can see whether it is a net benefit for society, things that actually improve people's lives and not are just designed to get a trend going that makes a bunch of people money. Some of these ecosystems are really just a modern day Ponzi scheme. I'm not going to call out names, but as you do your research, you'll begin to see what I'm talking about, and then come back and look at us, and you'll see that what we're doing is really, something that's based with, ethics and is designed to actually solve problems.
Very cool. And one more time, what was that one the other one that you mentioned? Cardona or something?
I may have butchered it. Cordera. Yeah. So forgive me if I butchered their name. You can do your own resource there, but I'll tell you though, I'm not here to advocate for or support or recommend or really advocate for any particular coin. I just am sharing with you my own philosophy as far as what I find interesting. And so sustainability is a huge thing, and fees are certainly a part of that. I don't know how long you've been following this, but one of the big selling points behind people arguing why we should do this in the first place, including the anarchists back in the day, were saying we're going to reduce fees. It was about lowering transaction fees, remember? And it was in addition to anonymity, but it was also, oh man, Visa charges so much, we got to lower these transaction fees. Haha. Now look at what you're paying. I mean, sometimes if you try buying a cup of coffee today with Bitcoin, you'll be paying more in transaction fees than you'd be paying for your coffee. So that didn't work out so much.
Yeah, so that needs to get addressed. And I agree with your viewpoint, too, on finding the projects that are making a difference. Because there's a ton of coins out there, a ton of ICOs. I feel like 97% of them are BS. But when you do your research and you find ones that have the right vision, actually solve a problem, actually have a utility, like that's where, you can find some real winners, some real cool projects and whatnot. So
can I add one more thing to that? I know you're probably going to wrap it up, but I'm going to add you one more thing.
Let's do it.
One of the things that we're doing, and this is sort of like on the laundry list of things that we're doing, but I believe that the cryptocurrencies can sort of create more value to a ledger. They can create more value to a capital stack on a deal. I was introduced a couple of years ago to the idea of negative equity, and I know that it existed during the 2008 global financial crisis, but we always knew that things were going to rebound. But I'm talking about properties in which the equity is upside down, and maybe it's due to remediation issues. It's a brown site. There's so much money required to convert the site into a buildable site that it makes it cost prohibitive. And so how do you deal with that? There's properties in places like Philadelphia that developers haven't touched for generations because it just costs too much to do anything with them.
Yeah.
We can solve these problems with a Cointinuum, and I like to share how, but I would ask your followers to check me out and follow our progression and our trajectory, and you'll see how we're addressing problems like that, turning over brown sites, creating viable real estate out of them, addressing the issue of data centers that are outdated and take up way too much power, and pull them away from the grid, by the way, and increase your property expenses vis-a-vis your power costs. So these are things that we can talk about going forward. But thanks again for the invitation. It was a pleasure to meet with you and to share your ideas.
Yeah, absolutely. Likewise. Thank you for coming on. Very insightful conversation. Definitely going to keep an eye on your guys' project and what you're doing. That example there you gave at the end is really actually an exciting problem if you could solve, because those super old buildings where, it costs more to fix them than it's worth, then, if you can figure that problem out, like, wow, that would turn a lot of areas around. So we'll definitely have to keep that for part 2. But
sounds good.
If you guys have any questions, put them in the box down below. We'll circle back. We'll get all those answered for you. Make sure that if you haven't already, you subscribe for future episodes. And also join us on the Real Closers Facebook group. Free to join. We're always in there networking, masterminding, sharing ideas and tips. And we'll see you on the next one.
Thanks, Oliver. Take care.
See ya.